Ask my panelists to turn on their videos. Okay, great. There we are. Good morning. And for those in the US, good afternoon. For those in East Africa, welcome to this second part of our two-part series of webinars on the United States, doing business in the United States, East Africa Apparel and PPE webinar. My name is Maxwell Okello. I'm the Chief Executive of the American Chamber of Commerce here in Kenya, and I'll be moderating today's session. Thank you all for joining us again for this second part. And for those who are joining us for the first time, please feel welcome. In Swahili, we say karibuni. We are pleased to have you join us for this session that is organized by the USAID Southern Africa Trade and Investment Hub, East Africa Buy-in Activity. And then Margaret will talk to us a little more about that. Trade Hub has been a long-term partner of the American Chamber of Commerce, and we're really pleased to be supporting these two very important webinars. The format for today's webinar, for those who attended the one on Wednesday, is a little different in that we will have just one presentation at the beginning, which will be led by Margaret, the Program Director for East Africa, USAID Southern Africa Trade and Investment Hub. And she is basically going to set the stage for us, after which I will moderate a panel discussion for about 50 or so minutes. Thereafter, I will invite the audience to engage with the panelists in a Q&A. And I really want to urge the audience to take advantage of this really great cast of panelists that we have. It's not every day that we get to spend 2 hours with the sort of knowledge that is represented here this morning and this afternoon. And so I urge you that as the conversation goes on, please post your questions in the Q&A tab at the bottom of your Zoom window, the Q&A tab, and not the chat bot, the Q&A tab, so that it's easier for myself and the panelists to actually be able to track what the questions that are coming in. Now on Wednesday, we had a really great conversation, heard from different speakers. And Andres is here with us today, was one of the speakers and the presenters on Wednesday, where we covered market linkages, US market changes, US market changes and trends for apparel and PPE. We also looked at social compliance, trends in social compliance and certification. We looked at technology solutions for the apparel and PPE manufacturing. And we also looked at the funding opportunities and transactional advisory support that is available for players in the space. So this particular session, we want to get practical. And so our conversation will cover roughly or broadly 4 main areas. One, will look at what strategies businesses in East Africa can deploy to maximize supply opportunities to the US. Secondly, we look at funding tools available for project and trade finance for East African apparel and PPE projects. Thirdly, we'll also look at how you can get yourself investment ready, identifying sources of finance for your projects, your apparel and PPE projects, and being able to attract investors. And lastly, this conversation cannot be complete without us hearing perspectives from both the buy and supply side. So we actually have with us today an exporter to the US market and a US buyer who's sourcing from the region. And I'll introduce or give an opportunity to the panelists to introduce themselves shortly. So I just want to reiterate that we will be recording this particular session. This is purely for internal purposes. I also want to remind you again, please, as the conversation is ongoing, type your questions in the Q&A tab. The Q&A tab, please, so that it's easy for us to keep track of the questions that are coming through. I may, as I said, at some point, call on some of you to field your questions directly to the panelists. And when I do that, you will be able to unmute your mic and ask your question. And so, without much further ado, I want to invite our host, Margaret Waithaka, Program Director, East Africa, USAID Southern Africa Trade and Investment Hub, to give her remarks and kick us off. Margaret, the mic is yours.
Thank you very much, Maxwell, and good afternoon, everyone. And for those who are joining us from the US, good morning. I'd like
Sorry,
to
Margaret, you'll need to speak a little louder or come closer to the mic. You're a bit faint. Thanks.
Can you hear me now?
You could speak louder, a little better, but if you could speak louder, that would be great.
Let me try and shout. Okay, thank you very much, everyone, for joining us this afternoon. For those who are from the US, good morning. I'd like to welcome you all to this second of a series of 2 webinars around the theme Doing Business in the United States. We'd like to thank AmCham for putting this together for us. And for those of you in Kenya who are not members of an AmCham and are doing business in the US, I think it's good to try and talk to them and find out what services they can give you. So let me just give an overview of why we are doing what we are doing today and who we are. The objectives for this 2-day webinar are given there, but maybe let me just put some context. We work for the USAID Trade Hub. The long name is the USAID Southern Africa Trade and Investment Hub. And we work for the East Africa Project, or the East Africa activity under the Trade Hub. And we've been in operation for about 4 months. We've just been setting up. And we wanted to make sure that the companies and the partners who are in the sectors that we work in, including the apparel sector, were aware of the changes that have been happening in the US market and how companies, technology providers, financiers have adapted and are able to help the existing exporters and aspiring exporters get into the US market. So the purpose of this 2-day webinar really was just to create awareness and to provide information about us as the USA Trade Hub, to provide information on the developments in the sector, that's apparel and PPE, to link you, the enterprises, to the sources of capital and technology. And a lot of that happened on Wednesday, and a bit more happened this afternoon, to have shared learning, and above all, to network. You might find some people here you can do business with. So please start engaging, asking questions, sharing information, chatting, and you should be able to maybe find somebody you can do business with. So about the organization that's sponsoring this event, we are called the USAID Southern Africa Trade and Investment Hub, but it's a long word, so we usually call it USA Trade Hub for short. This is a 5-year trade and investment program sponsored by USAID for Southern Africa. It's intended to increase global competitiveness, intra-regional trade, and improve food security in Southern Africa, partnering with Southern African countries to increase sustainable economic growth, increase global export competitiveness, while also growing trade in the targeted Southern African countries. We also work to increase exports to the US and AGOA, and also to boost capital and technology flows and provide targeted trade facilitation support. However, we are not in Southern Africa. As you can all see, we're in East Africa. So why are we in East Africa? So what happened is the USAID missions agreed they would collaborate, and they established an activity through the Southern Africa Trade Hub, but located in East Africa. So we are currently working to promote economic activity between the US and 5 East African countries. That's Ethiopia, Kenya, Rwanda, Tanzania, and Uganda. And this 18-month activity is expected to boost 2-way trade between the US and East Africa under the US government's Prosper Africa initiative. And our focus will be on the following: expanding exports to the US and AGOA, supporting exports of technology from the US to East Africa, and also exports of capital. And finally, facilitating the reduction in barriers to trade within East Africa, principally the East Africa community. The things that we'll be doing in terms of activities, we'll be doing end market reports for the targeted sectors. We are coaching enterprises on how to engage with the US market, and this capacity building is leading towards that coaching. We'll also be conducting linkages to the US market, both US market, the US capital, and US technology. And finally, we'll be supporting regional trade and also linking regional trade policy analysis and review, and also linking East Africa and US private sector association. So not just firm to firm, but association to association. What sectors do we work in? We're of course in the apparel and PPE, sector, personal protective equipment, which is the subject of today's discussion. We're also in specialty foods, including teas and coffees, footwear, home decor and fashion accessories, and a new sector we introduced this round, which wasn't there in the previous trade hub, which is essential and natural oils, all very relevant under the current pandemic conditions. Let's look at the statistics of how the trend has been for the last 4 years. That's 2016 to 2019. We're looking at 5 East African countries. That's Ethiopia, Kenya, Rwanda, Tanzania, and Uganda. The total exports for the region by end of 2019 financial year was just over 711 million US dollars. And this grew from a low of $491 million in calendar year 2016. So you can see there has been quite a substantial growth, almost a doubling in those 4 years. And in addition, some countries have grown at very, very high rates. If you look at Ethiopia, in 2016, they only had 32 million US dollars. By end of last year, Ethiopia was doing 207 million US dollars as annual exports and grow. And even this year, the growth has been tremendous. And all the countries, I think, have been able to sustain some level and increase. So overall, there has been a good performance. And we hope that within the few months we have, we will support you as the enterprises and you as the partners to help to grow those figures to even higher levels. My contact details are there. So we have a small team of 2 here in Nairobi, myself, and Naima is our program officer. If you'd like to get in touch with us, those are our contact details, and we welcome you to engage with us directly so we can grow the business for all of us. Thank you very much, and welcome and enjoy yourselves this afternoon. All right, bye.
Thank you, Margaret. Appreciate your remarks. So I'll very quickly move into the panel discussion. And I just want to keep reminding you, please type your questions in the Q&A tab as we move along. So I want to start off by inviting our panelists to each introduce themselves, their organization, and you can give a few or a brief open remarks, or some brief opening remarks, excuse me. And I think, yeah, in the interest of time, let's keep this within at least 3 minutes for each of you. And I'll start off with Binzu, followed by Siddharth, and then Sen can come after Maurice, and we can finish off with Andres in that order. So Binzu, please go ahead.
Thank you so much. So good morning and good afternoon to everyone. My name is Binzu Mulea. I work for Trade and Development Bank as a Senior Trade Finance Officer. So Trade and Development Bank is a bank that is key within regional growth in terms of fostering trade within the region and for sustainable growth. Excited to be part of the panel. Thank you.
Thank you, Binzu. Siddharth?
Hi, my name is Siddharth Sinha, and I'm the Executive Chairman of the Velocity Group of Companies. We have been exporting to the US for over 30 years now. We've got a presence in, we've done business in the Middle East in the past, and currently we have a presence in North Africa, which is Egypt, and our newest venture was Ethiopia, where we've done a fully sustainable green setup. And we are not only doing manufacturing, but we also have a private industrial park. Thank you.
Thank you, Siddharth. Ken?
Hi, good afternoon or good morning, everybody. Thank you to the Trade Hub team and to AmCham, Maxwell and Ava and the crew for a kind invitation to participate in these 2 great days. Wednesday was a great session, by the way. I listened in. My name is Ken Williams, or Sen, doesn't really matter. I'll answer to either. I'm the hub leader for PVH. PVH, for those that don't know, American umbrella organization which owns brands such as Calvin Klein and Tommy Hilfiger and a basket of American retail space. We ventured into East Africa in 2015, 2016, in both Kenya and Ethiopia. We already had existing and quite mature manufacturing platforms in Jordan and Egypt and Mauritius. We're also adding Madagascar to our portfolio in the next few months. We are established out of Nairobi as our head office, our hub. Here I am in the garden, as you can see, because I'm evicted from my home by my children having precedent over education. This is the new PVH Kenya office. It's been a great journey for us. We've linked up with so many amazing people over the last 5 years. It's something I would love to share, some of our trials and tribulations, our successes and our failures. So it's great that you've been kind enough to invite us to talk today. Thank you. Nice to talk to you.
Thank you, Ken. Looking forward to that. Maurice?
Yeah, thanks, Max. Good afternoon, good morning, everyone. My name is Maurice Kimani. I'm a project leader at Open Capital. Open Capital is a financial advisory and management consulting firm, and we help businesses think about growth, think about venturing into new markets, but also help them engage with capital providers. So through that capital raise process, we link businesses with investors and help them go through that process and close investments. Over the last 10 years, we've completed around 700 engagements across 22 countries in sub-Saharan Africa, and we've helped companies mobilize over $600 billion of capital. So I'm looking forward to the discussion today.
Excellent. Thank you very much, Maurice. And last but not least, Andres.
Hello, my name is Andres Saldias. I am based in Florida and sunny state in the US. I've been involved with the hub for the last 3 to 4 years as trade linkage apparel consultant. During this time, we were able to get connections between US buyers and factories in East Africa. I have personally visited about 90 factories in the region, including some virtual visits in Southern Africa recently, and was able to bring about 8 buyers' missions to the region. Some of them started operation for the first time. Provided as well 120 business-to-business linkages between buyers and factories, including some visits from factory management to New York, Columbus, Miami, of course, before the pandemic. My main focus to support the project is to provide advice on how to connect with buyers in the US market. Thank you.
Thank you very much, Andres. And there's a reason why I wanted you to introduce yourself last, because you left us with you call them 3 key words on Wednesday: transparency, collaborative sourcing, and speed to market. And I'm sure the audience, for those who were there last time, have been reflecting on that. And we also know that the East African region has developed experience, quite considerable experience, as an apparel export hub. What would you say are 3 or 4 steps that the sector should take in order to sustain the current growth rates and the competitiveness that we are seeing, especially in light of this COVID situation and the 3 words that you left us with?
Thank you, Maxwell. Well, I think those 3 big words entail several other factors that are working around it. Let me start with the collaborative sourcing first, because this is related to the sourcing process after COVID. It's not just a matter of producing samples on time and compliant with all safety and industrial regulations, but moreover, the collaborative sourcing now is related to solve one of the main factors and main weaknesses that East Africa and the rest of the globe actually has, except China, which is the fabric supply factor. That is probably one of the main challenges in this post-pandemic era to solve by collaborative sourcing, meaning how to incorporate the value chain in a comprehensive manner. from the cotton to the apparel. That is the biggest challenge. And of course, that entails a lot of knowledge on producing fabric. That involves a very large amount of investment. To set up a knitting machine probably is $50 million. So that is, excuse me.
Yeah, you seem to have frozen there for a bit.
Can you hear me now?
Yeah, we can hear you now. Please go ahead.
Yeah, so basically, solving this fabric supply factor is one of the main triggers to keep growing in the U.S. market, and that's the weaknesses, and not only in East Africa, but also in many other countries in the world that I've been advising. That will solve the next problem, which is the speed to market. Once you have that under control, then you can shorten your lead times and therefore be competitive to supply the stores online, reduce the inventory, which is part of the COVID impact, and ensure that the retail industry can generate cash flow in a more faster manner. So those are the main factors, in addition to the transparency factor, which is mainly the new era about digitization, automatization of production flows, and informing all this information to the buyers. As you can see, due to COVID, traveling has been banned, and buyers are wanting to know where are the POs, how is the inventory levels on the warehousing, how is the QC levels moving on, and that is the support of technology through digitization. So if factories are moving towards that era, they need to invest in that kind of technologies to maintain that relationship with the client. So all those factors together are the blend to face this challenge after COVID. And what I've seen in East Africa about what I call the regional value chain, that's moving in a nice manner, but not as fast enough. I wish there was more fabric supply mills that can comply with fabric certification and supply the CMT factories that are plenty in East Africa. So just to throw these factors in the conversation in a short manner, I'm sure we're going to be discussing those in further insights after your comments.
Okay, thank you very much for that. And I want to bring in Binzu to the conversation. What Andres has talked about, the will need obviously to be facilitated from a finance perspective, from a funding perspective. And I'm sure, as the Trade Development Bank, you've been in this space, you've dealt with these sort of, businesses that are looking to grow, they're looking to expand, they're looking to export. What are some of the challenges that you see when it comes to the aspect of financing for these businesses?
Thank you very much for that question, Maxwell. So there are a number of challenges that we've seen in terms of such businesses, accessing finance. And one of the challenges is the limited understanding just of the sector itself. Very little information, collaborations have been seen across the regions in terms of what the apparel businesses are, understanding the value chain itself end to end. Has been lacking within the financial sector and also the financial providers at large. And that in itself then results in the hesitation of various financial providers to come to the party to support such businesses. Another challenge that has been there is in some markets, there's limited liquidity. And what we mean thereof is that some countries or some financial providers then would look at more strategic, commodities or products to support, but, shying away from, the apparel businesses. So obviously the availability of liquidity as well has been a challenge. From the apparel business as well, what we've seen as well is the lack of information. So there's limited information that is provided to the financial services providers in terms of analyzing the business, in terms of looking at the financials, the cash flow projections, etc., to enable them to provide an informed position of whether they've got appetite to actually support these particular businesses. And that's an area that obviously needs to be looked at by these particular businesses in terms of having the information readily available. And when there is no information, information, this obviously results into the lead times in terms of processing this financial assistance that they would be requiring. And Andres spoke about speed to market, and then that basically is not actually being achieved because there is that gap when it comes to information that is being provided by the businesses. Again, the other challenge that we've seen obviously is the cost of financing. We've seen that the cost of financing is very high, and TDB in this particular aspect then comes in as we promote growth within the region to see how we can then partner with these particular businesses to ensure that we provide affordable financing and structures that are suitable to the business. Again, the competitive landscape in terms of the global competitive landscape and the consumer demand. As we know, we are in the COVID times. Demand has decreased. We've seen some of these particular brands, for instance, in the US, predominantly closing up. Some of them have gone underwater and are looking for assistance. Now, when we look at that in terms of coming out of the big tycoons, such as your China market, your India and your Vietnam, then the question thereof is, are we able then to provide that particular financing to the local businesses, the apparel businesses within the regions that we are present? Lastly, I think there's also lack of deliberate solutioning because of the first challenge that I did mention around the limited understanding of the business. The question then is, how can a financial institution or a financial provider come into play in terms of providing the right fit or the tailor-made solutions that these particular businesses would want? Now, with lack of deliberate solutioning, this then brings up challenges around the gap of the financing that these particular apparel businesses would want to access from financial providers. Thank you.
That's quite comprehensive, Vizu, and I like the fact that you've clearly outlined the various challenges, which really, in my view, are gaps that businesses need to fill on one hand. But then you've also admitted towards the end of it that there's no deliberate solutioning, which now requires the banks and other financial services providers to be able to come up with solutions that are relevant to the apparel space. So I want to bring in Sid. I can see Sid that is burning rubber. Sid, why don't you? I think you want to give a comment on what Vizu has said. Tell us your experience. What has been your experience so far?
So far, it's been, well, I think it's been a great experience. I mean, it's been a lot of learning. Coming into East Africa has been an eye-opener, almost. I mean, it's been a part of the world that has been unexplored for quite a long time. And I think that I think the potential is tremendous. I think that really, really high quality potential exists over there. And it's just a matter of getting the right combination of elements together to make it happen. Now, I completely agree with Andreas on the fact that we need to have supply chain within proximity, because logistics is an issue in most of these countries. And if we have internal supply chain, it solves the problem. But putting up internal supply chain is like a 3 to 5 year kind of time horizon. And I think that there are better solutions that can be looked at with financing for more immediate solutions. Like if we had the possibility to get the right kind of financing in place, then warehousing the raw materials is another way to get closer to speed to market, to have more accessibility of the US business. Because a lot of items are more or less I mean, a lot of the raw materials can be fixed, so to speak. I mean, it can be decided that this is what we will use. Fashion, colors, and things do change, but that is not the step that is required in this part of Africa right now. So what we can do is, while the mills, etc., are getting set up, we could set up really efficient warehouse systems in which we can keep stock and through that manage supply chain and speed to market. So I think that that is another big opportunity that currently is not being explored.
Thank you for that, Sid. And let me bring in another operator, bring in Ken to this conversation. Ken, we know, and I think this is something that is clear from the last meeting, that several of the US brands have had a really tough year, and so has everybody else. So it's not anything that is unique. What measures do you think, in your view, brands need to take to better manage the uncertain consumer demand? We talked about a dip in consumer demand that we've seen. Are there some practical steps that some of those brands are considering right now to better manage consumer demand?
Yeah, it's a good question, Maxwell. I mean, I'll just focus on those three words you said there: uncertain consumer demand, because that's exactly what it is, and it's the time of the proclaimer right now. We've got a lot of people saying the business and the retail platforms need to go in this direction, and then you've got another, sort of group of people saying it needs to be this direction. The reality is nobody really knows the true projections for the next 12 to 18 months. It is uncertain. There's no two ways about that. And I think from our point of view, I think what we're trying to be is to sort of empty our mind of this binary thinking. Yeah, stop thinking that you have to do something. You need to absorb, reflect, because people simply don't know. Okay, so I think it doesn't do any good for anybody to leap from one trench to the other and have these dramatic swing shifts in what needs to happen. Now, having said that, there are some things that are blatantly obvious. The first one for me is, a business that's got a global supply chain and a global retail footprint is 100% exposed in each continent that it operates in. So if you're procuring materials from continent A, you're making product from that material in continent A, B, and C, and you're selling that product in continent D and E, then you're exposed 100% three times. Yeah. And I think that is unquestionably one of the takeaways from this whole COVID pandemic experience. If you just take January and February, everybody was deeply concerned that demand would outstrip supply. China was on lockdown, materials were embargoed, and factories were closed. Everybody was getting really panicky. And here we are 6 months later, and it's the opposite that's true. Supply of materials from China is actually okay. The retail platforms, however, across Europe and America particularly, have been really impacted. So that's the point. It's very difficult to predict accurately what's going to happen. But one thing for sure is we envisage a transformation to bring the material supply and the needle point closer probably than any time since the 1980s. And I think East Africa really needs to seize this opportunity, because ultimately it's in a good place. It's in a very, very good place right now. And I think the last point, going back to what Andres said, he's made a lot of great points, is that the world is going to become digital. It's a digital world, okay? And obviously, if you've got the digital selling platforms in place, fantastic, and you're reaping the benefits of that exponential growth. If you haven't, get there. Whether it be on the technical platform of approval of samples and fabrics, or whether it be on the retail space, it's going to be a critically important part of the future. The world is going to get a smaller place, that's for sure.
Yeah, absolutely. I think they're calling it the new world order. I mean, everyone has been kicked into the 21st century, so to speak. The very fact that we are having this conversation on Zoom digitally is testament to that. Let me bring in Maurice into this conversation. And, one of the things that players and specifically apparel investors talk about is the capital constraint. While on the other hand, organizations such as yours, and including other investors and financiers, have more funds than they can actually deploy. Why is there a mismatch, and how can this gap be breached?
Yeah, thanks, Maxwell. I think there's lots of factors that come into play here. One frequent reason why we see, at least from the work we do with businesses and investors, why deals don't close is that businesses are not perceived as investment ready. And it's sort of a push and a pull in the sense that businesses have a committed entrepreneur. They have a market opportunity. They have a strong market opportunity, and they also have the strong local networks given where they operate. But then if you look at it from the point of view of the investor, an investor is potentially looking for a well-articulated long-term strategy to excite him about the opportunity. They're looking for a company or for businesses with a significant track record, and potentially some of the materials or the documentation around having an investor memorandum that articulates that growth, putting your projections in place that then quantify what your capital need. And then if you think about the due diligence process that goes, the due diligence process that they then want to go through, companies often then don't have a lot of all the documentation that they'd expect to see going through that process. So, and this is where then businesses need that support, so that we're filling that gap and aligning with investor needs. So some of the things or some of the areas we support businesses are on articulating now some of those growth strategies and documenting them into investor materials. Also thinking about how do you develop internal systems and processes and have the right governance systems in place to then build investor confidence, and then putting the right team in place to support, to show that you are able to action on the growth that you're presenting. But and if that's not the case, having a clear plan on how do you onboard new team members to help you support with that growth. And then ensuring that you have all the other documentation readily available. So a short investor teaser, a financial projection, or highlighting what your capital needs. And then also understanding what the investment process and the various forms of capital are to then help ease that process. And also, in our experience, what we see is that investors are often seeking support. And this is largely to access market intelligence, to understand pipeline, and also to conduct due diligence on some of the potential investments that they want to get into. I think, as Benzo said, sometimes investors don't have an understanding of the sector. So having a credible transactions advisor to then help you think about that process, help you identify the good investment opportunities, and helping support the investor then through that deal process becomes even more important, especially for investors that don't have a local presence or that haven't traditionally or historically invested in a certain sector. So I think those are some of the areas we see when it comes to that gap, when it comes to investors potentially not having the right opportunities to deploy funding, and businesses feeling that they're not getting the funding from investors.
Okay, that's great, and it really shines a light on how you think from an investor's perspective. Let me bring back Sid into the conversation. Sid, what opportunities do you see in the coming years? You said your experience so far has been great, with your greenfield in Ethiopia. What other opportunities do you see in the coming years for this sector from your vantage point as an operator?
Right. So there is the AGOA, which is the biggest advantage that exists in Africa, and I think that really has not. We haven't even reached the tip of the iceberg as far as using AGOA is concerned. I think that the issue is the unknown factor. This is what we've got against us, is the unknown factor of reliability or not, or from the major buyers in the US, but slowly through the work that's being done, there is some awareness that is coming about, and as that comes about, the production has to move to this area, because this Africa is the only continent that has what it takes to manually sew garments. I mean, we are automated to the maximum extent that can be, but still it is still a manual job, and you need people to sew. So Africa has a population averaging at about 18 years of age. This industry requires a young workforce. It almost is like a first job kind of situation. So it's got everything that's there. The new investments that have been made into Africa are all keeping in mind sustainability. It keeps in mind all the green factors. So everything that has been set up in Ethiopia has been keeping a strong focus on maintaining the sustainable aspect of production. So as the world moves on and we move more towards sustainability, Africa is already building in that manner. And therefore, the infrastructure is right, and the skill is there, the discipline is there. So I don't see why it would not be the fastest growing area for this industry. We do require, I think, like Andreas rightly pointed out, supply chain material is the missing factor that needs to be dealt with. But I'm sure that's coming too. I'm sure that it will happen, and all of this is going to develop really well. I do think so. And as far as COVID times, well, that's another subject altogether. I mean, everybody has been caught off guard with that one, and I think we all need to reassess how we look at things, and we have to be just very flexible. I think the key to dealing with COVID is flexibility. When COVID first started, what we did was we immediately in February we switched to we just pivoted onto PPE material production. We converted our laundry facilities to wash denim into doing coatings that would withstand, they would make everything waterproof. We did a various number of things, and we just put them everything in place and ready to go. So if there was, in fact, we even went and got ourselves certified for CE certification to export into Europe, PPE material. So those are the things that as an exporter, I think it's important to be very flexible. We don't know what's coming, and we don't know what we need to move to tomorrow, but we should be prepared.
Okay, great. Thank you very much, Siddharth, for that. You brought up the issue of AGOA, and I know Andres has been involved heavily over the years in AGOA. Andres, what do you think East African producers need to do to take advantage or maximize the opportunities left within the 5 or so years that we have before AGOA expires?
I think East Africa needs to learn lessons from other continents on what happens when you have a time frame of the duty benefit, because it does not allow you to long-term visions in investments, and even some buyers are looking for long-term relationship. But when you have a cap of 3-5 years, it certainly plays a factor. Central America started with a scheme like that, with a unilateral benefit. And then they moved into a free trade zone agreement. So when I heard that Kenya is moving toward that direction with the US, I think that that gives that time frame. So that's from the regulatory standpoint of the projection long term. I think Africa should consider in that scenario with the US in order to move into a long-term scheme. Now, as far as the benefits of using AGOA at this point, at this particular point and on, I think still some great opportunities. Recent survey from Gartner that came up on May, they did a survey of over 100 decision makers of the retail wholesale industry in the US, and 33% of them have expressed that they want to move out from China, 33%. Now we're talking about the largest supplier to the US, over 50%. Now, all these decision makers wants to move out, but where? Of course, they're going to go nearshoring, but there's a limit there. And then that's when the offshoring comes into play. And as I mentioned yesterday, when I was in the last American Association of Footwear and Apparel trade conference about global supply chain 2-3 weeks ago, the word Africa was mentioned 12 times during the conference. And it was about 150 attendants from several brands like PBH, like G3, like Puma, and Gap, and Levi's, and so on and so forth. So the trade war, of course, it's over 2 years, plus the pandemic that at the same token is playing against China, because there's a sentiment in the consumer side against China, believe it or not, and then we play with the emotions of the consumers as well. So this momentum, it's particularly interesting to find alternatives to provide to this market in the short term. I don't think in the next 6 months is going to be very clear, because we're in the resilience process at the point as we speak. But I think the markets are being reconfigured. People are starting to go out and shop, which is the most important thing. Last weekend I went shopping some shoes for my son, and I was happily surprised to see the mall being probably at 60% of its capacity, which is huge. You know, if you would go 4 weeks ago, you'll see 10-20% of people walking around. It was a ghost malls, you know. So people is gaining back to confidence, starting to shop, and that change of reaction is going to start going back to the headquarters and the buying offices of all these brands that are facing all those cash flow problems, and of course trying to rebuild that supply chain in terms of volume, considering and learning from the pandemic that having one single source of their products, which is the Far East, was not the smartest thing. So I think the opportunities for the country are there. Why it's not being exposed, as Siddharth said, I think there is a need of the factories in East Africa to be a little bit more aggressive on pursuing this market, improving their marketing access, working harder on trying to reach this part of the world with new sales pitch, selling country image, factory image. There is opportunities. Every client that I've spoke in the last 2-3 years gave me a positive response. Yes, I would like to learn more about East Africa. I never had an answer. No, we're married with East Africa, and we don't want to hear from any other vendor, or from Central America, or Turkey, or any Eastern European countries that also produce. So Africa is an option. We just have to move more aggressively into exposing the factories, because I've seen the factories in East Africa, and I agree with that. There's a lot of potential. There's a skill set. They have the gold of the industry, which is the cotton. I mean, Uganda has one of the best cottons in the world compared to the Egyptian cotton or even the Peruvian cotton. So why that doesn't go into an effect to build a value chain, an integrated value chain? Why nobody can invest $15-30 million to put a state-of-the-art knitting or woven facility in Uganda? Okay, I know Tanzania is moving a little bit more aggressively, but yet it's still not in the volumes. I think they're reaching the quality levels properly. But there are other areas in other countries, like Siddharth said in Ethiopia, right? Mauritius has great opportunities. Even Madagascar is moving towards that integration. So those are the steps that need to be considered by the enterprise and entrepreneurship on your region, and I think it's doable. I really believe it. I sense the market here on the interest to move into the region as fast as possible. Of course, with the pandemic limitations at this point.
Yeah. No,
Thank you, Maxwell.
Yeah, that's great. And of course, we have Ken here who might want to add one or two things, given that he's a buyer, in terms of that demand side of things. Ken, any comments on that? You're muted.
Yeah, sorry, my screen stuck. I beg your pardon. Yeah, look, I mean, it's very interesting points from both Sid and Andres, right? They're spot on. I mean, Sid's right about his concept about consolidation depots, and you know, that's a stepping stone to a quicker response vehicle. You know, co-funded with brands. That works. You know, we have that in Indian subcon where, you know, we co-fund materials. They sit in a warehouse, and the orders are placed on a Sunday and they're shipped on a Friday. You know, that's you're not going to get any better than that. That's world class. You know, but I think the point that Andres made there about, you know, where the farm to fashion piece comes into play, right? I think there is a need sometimes to just, people think that we've got to have the whole ticket, right? You've got to have the whole ticket. You've got to have the cotton. You've got to have the volume. You've got to have the quality of the cotton. You've got to have the ginning. You've got to have the spinning. You've got to have the weaving. You've got to have everything. Otherwise, it doesn't work. And I think we've probably proven that in East Africa, you can take it, you know, you can take it step by step, right? You don't really need to force the ticket. The farm bit of it will catch up. You know, it's okay. Yeah, there's volume. There's definitely scalable cotton sourcing here. Some of the political positioning, and obviously in Kenya they just put some legislation in to allow, you know, the cotton market to thrive a little bit. All that sort of stuff's fantastic. But ultimately, what you want is just to sort of piece it all together with a strategic aim, not to have to crash through it. And obviously, the more barriers you put up in front of you, the more likely you are to fail. So I don't think that's something to worry about too much at this stage. You know, nobody else has stood up a value chain, a proper value chain, in the last 30 years. So why should East Africa be any different? As long as you've got that as a long-term goal and objective, then I think it's okay. You know, I don't see any challenge.
Yeah, yeah. Very well put, very well put. I just want to remind our audience. Yes.
Sorry, I'd just like to add one point that the AGOA has to get renewed. I mean, there's no two ways about it. I mean, for any of this the time horizon is such that 5 years is again just when certain things will just start coming into play. So the AGOA, I mean, everybody has to move towards the AGOA getting renewed. I know there is the GSP with Kenya that's on the cards, but that would then take Kenya ahead, and the rest of East Africa would get left behind, or the rest of Africa. If AGOA is removed, that would be so yes, I think everybody has to work together to get the AGOA renewal done.
All right. I just wanted to remind the audience, please put in your questions in the Q&A tab as we move along. And there's actually one question here for Benzu that I'd like to address to you, Benzu. There's a question from Ashish Agrawal, who's asking, does your institution accept, does the institution accept or take equity funding or provide equity funding for debt restructuring?
I mean, we've got various, thank you for that question. And just to answer, we've got various solutions that we give our clients, and we endeavor to tailor make for a client depending on their needs. If a client comes to us and they're looking for funding, that's something that we can look at and give them, be it working capital, be it CapEx, to a large extent. And of course, we would need, the client or the company to have a certain level of equity. They need to have skin in the game to a large extent. But yes, we do support various businesses and various businesses and sectors to a large extent. But obviously, the nuances vary. And they can be looked at case by case. I'm happy to possibly have an offline conversation on what the actual requirement is for the client, basically.
Okay, thank you for that. And I want to address the next question to actually Maurice, but feel free to comment on it, Benzo. The issue of collateral, that always seems to be a limiting factor when it comes to access, when it comes to access to capital. Or even credit, depending on what the need is at that particular point in time. Any views on how, especially your smaller players, can overcome that barrier? Because it's a proper chicken and egg situation. There's opportunity, there's drive, an entrepreneur wants to, get things going, wants to move their business to the next level. They don't have collateral to be able to access the amount of credit that is required or financing that is required. Yet they need that in order to be able to scale and move to the next level. Any thoughts on how that gap can be bridged or overcome?
Yeah, sure. Thanks, Maxwell. I think we often see businesses who are coming and who require collateral when raising debt are mostly working, like, let's say, through commercial lenders. In this case, it could be banks where the collateralization rate may become prohibitive. It may be hard for SMEs that don't have, let's say, very close relationships or well-established relationships with banks to get funding in the absence of collateral. So I think when you're thinking about access to funding, it really then depends on what type of credit you're looking for. So if you want to, say, finance capital expenditure, and this would be investment, let's say, into newer machinery, we've seen that there's an increasing number of banks or even leasing companies and other non-bank financial institutions that are providing diverse asset-backed lending solutions. So, for example, financial leases. And in this case, the asset itself becomes collateral, and therefore the company doesn't need readily available collateral prior to raising the debt. And then if you then think about, say, raising or looking for working capital, this can be more challenging unless then the company, you already have an off-taker and you can use the apparel sales contract to structure project finance like instruments or have such arrangements in place. But whether it's CapEx or working capital, I think we've seen that there's an increasing number of value chain financing models that are coming up across different markets, where you'd have one, say, a large buyer being the guarantor for the lend, being a guarantor to then support the apparel firm that's lending, or even extend working capital loans directly to them as suppliers. And then I think there are also then other options too, if you're thinking about it, because if you're raising debt, often as a business, you don't want to over leverage your balance sheet and you don't want to stress your cash flows. So there could be other opportunities to then think about, is debt then, are we looking to raise debt, or would there be options to raise other forms of funding? That said, I think there's also some efforts that we're seeing in place that are coming where you can put up better functioning asset registries for then, whenever you think about it as movable or unmovable assets, to then facilitate the process of using those assets as collateral if they're available. And then you could also think about how can we engage either investors that we already have or new investors to then give us alternative forms to give us either debt or to give us equity-like funding where the need for collateral would be lower. It will have implications on like the duration of time it takes for you to raise funding. But those are some of the ways we think about alternatives to seeking funding from banks or from institutions where collateral is needed as part of that process.
All right. Well, that's great. And Benzo, you want to add something to that?
Yeah. So maybe just to add, and I think Maurice has summed it up very well in terms of how you can structure debt, whether it's working capital or if it's long term. And of course, for long term, having that there's equipment involved, you could obviously look at the asset best financing that's there. And for working capital, obviously, you would also look at ring-fencing receivables, but of course that obviously needs that there is a buyer out there that is confirmed to a large extent for you to ring-fence those particular receivables and get assignments, an assignment out of that particular transaction. But if, for instance, there is flow products that don't have orders, structures such as possibly looking at insurance cover would be something that would look to just enhance that security package for the client. So there are various ways that you can solution. So collateral should not be a major hindrance for clients or for the businesses that are present here to access financing to a large extent.
All right. Thank you for that reassurance. And still staying on the same thread, I want to bring in the audience into the conversation. Jonathan, please go ahead and mute your mic and ask your question. It's a finance related. Let's take it now.
Right. There are instances where sometimes the financial health of the organizations, the vibrancy of the business, and the predictability of the market is very positive, but the organization doesn't have like the collateral. But the very quick turnaround between the time they manufacture, produce, and are paid is very, very vibrant and is predictable over a period of time. Can that suffice in instances where perhaps maybe quite a large amount of short-term working capital is required for very huge operations?
That's for you, Maurice and Benzo.
Yeah, I think from some of the from the experience, what we've seen in the market is that if you have that predictable cash flow within the organization, and you know that you're in a strong enough position to say refinance that the working capital loan once you get repaid for by the client, some of the things we see is there are organizations that then are using, like are giving working capital specific loans. If you have that that guarantee from the buyer that the repayment is going to come within a certain time, and they can see like from the health of your balance sheet that you'd be able to repay that over a given period of time, then they provide those it's easier to get working capital loans in the absence of collateral. So it becomes easy if you're in a strong financial position to then raise working capital finance as opposed to using, say, collateral for you to help you fundraise.
Okay. Benzo, you want to add on to that?
Yes, Maxwell, thank you so much. So as Maurice has mentioned, obviously your cash flow projections are what actually a financial institution would lend you on, because that's the strength of your repayment other than the security. So your security is a second way out. So if you have strong, cash flow projections and you're able to demonstrate that there is, an off-taker of your goods, then that's something that a financial institution or financial provider will then look at. But also if there is possibility of enhancing the structure, then your insurance, credit insurance comes into play to a large extent, just in case the cash flows are not as projected in reality. And that's why sometimes would stress those cash flows to just look for those uncertain times if they do materialize, to a large extent. So indeed, there is way to kind of structure outside of collateral.
All right, thank you. Andres, are there products or segments that you see in the US that you see the East African apparel sector being a good match for? I'd like Ken to comment on this as well. Andres?
Yeah, that's a broad question, and yes, I think it's in the reverse way. The market can take those, but the reverse way. What are the products that East Africa can produce competitively? Right? I think the needs it's one of the biggest area due to the fact that there's cotton in the area, but yet there are multiple investments and buyers that are going to the region, and as Ken mentioned, they are able to manage the fabric supply shortage at the moment by warehousing or just including in the transit time in the operation. The Hawassa and industrial parks experience in Ethiopia has proven that that's a segment that can absorb a lot of volume that also is related to the labor conditions and the skill sets in the country. I also do see a lot of potential for the woven sector. There is amazing factories in the region that can do the shirts in a manner that's amazing. Underwear, last year we brought a large buyer from underwear into the region and walked them with about 4 or 5 factories, and they were very impressed on what the countries can supply. The denim industry, I think Siddharth can give us a lesson about that. It's another segment that is pretty huge, but also it's kind of tricky if you are looking for to competing in low segment prices or high end that's going to be paying premium prices. The segmentation in this market is very diverse. You start with mass merchandising, low end price, but volume like the Walmarts or Targets, or you go to the middle end, some design, some variation of colors like Banana Republic, the Gaps, and so on. And then you can go to the high end premium prices, but a lot of fashion, a lot of requirements like Donna Karan or Ralph Lauren. Or you can even go to smaller boutique, and a smaller boutique, the Linda Richards, nobody knows her, but she has 18 boutiques. Okay, she can easily fill a container on a variety of products. So the question is back to the region, what the region can offer competitively and provide a good service, because it's not just a price that the buyers are looking. Of course, it's important, but more importantly is the service, which are at the end the 3 big words: collaborative sourcing, transparency, and speed to market.
All right, great. Ken, you want to add on to that? And Sid, also feel free to comment on this specific question.
Yeah, I think Andres has picked it up. And look, if anybody does know what's going to happen in the market in North America, please let me know, because it's really difficult to work out. But no, I mean the definite swing. Okay, look at us all. I mean, PVH is the world's biggest tie maker. In 2016 we were making 65 million ties. Yeah, this year we're looking to be about 10% of that. So people now wear a tie because they need to, not because they want to, right? It's that sort of swing away towards casualization, I think. And probably, it's difficult to say, but it's very likely that the pandemic has probably seen us all move towards sort of active wear, lounge wear, products in preference to formal and dress wear. That's just the natural being of things. Whether that bounces back or not, that's a different question. We'll see. But for sure, that's the sort of thing that you've got to be dexterous about, I think, right? And I think that's the question for all of us in the world: is are we agile? Are we open to a capability change, right? And understanding that what we've always made may no longer be what the market requests or demands. So the virtue that any brand is looking for right now is probably flexibility. Is actually saying, it's an old word, right? But it's actually probably more true today than it's ever been. Is that you can actually turn your hand to a number of things, as Sid said there, repurposing your business to do PPE. I've heard factories say to me, we can't do PPE. It's like asking a Boeing to make a paraglider, and you go, yeah, it is. But you both fly. So, try and use some of the common denominators and build and repurpose your business around it to give yourself an attribute. I know there's a guy on the call here from Raymond's in Hawassa, a guy called Shashi, who's, Raymond's one of the world's best suit makers, in the world. Yeah. not much demand for suits right now. So he's managed to, you know, repurpose his whole facility there to make industrial standard accredited gowns for, you know, for international use in hospitals and the care society. Fantastic. How's he done that? He makes suits. You know, so that's the sort of thing I think that the world is asking now, is can you be pliable? Can you be versatile? Can you be flexible?
Yeah, and relevant.
Yeah.
Siddharth, you want to comment on that?
I think Ken and Andreas have summed it up really well. There's nothing much there to add. It is all about flexibility. I think the way forward is that it has been for the last 10 years. I keep saying that, I keep telling my internal management that the only way to survive is to be completely flexible. I've been saying this for 10 years now. We produce, we can't get stuck on, we produce this and we are going to produce this. We need to produce what the market wants. So that is something that if one can keep that in their DNA, you won't go out of business.
All right, thank you. Andres, the alternative sourcing regions such as East Africa, and I know you mentioned this before, given the disruption from COVID and the move or the starting to look away from China. How is East Africa faring as a potential home for sourcing when you talk to your networks in the US? Is there a propensity? Is there for East Africa as a sourcing a home for replacing that lost capacity?
Well, let me start my answer by saying that we're not alone. There's multiple players around there, and there's multiple players that offer similar competitive advantages than Africa. If you look at the next door neighbors from the US, 2 days of transit time in a 40-foot container in Central America, with a Caribbean Basin Trade Partnership Agreement with zero import duty for garments, then of course the buyers are going to look into that option as well. Haiti has become a tremendous supplier in the value chain. Yesterday, I was talking to an East African firm in Tanzania, and they do have installed a factory in Haiti, for example, right? The Dominican Republic as well, which they have a free trade agreement. Then you have the Andean Trade Preference and Drug Eradication Act in South America with large suppliers like Colombia or Peru, right? And then you need to struggle with the traditional guys, you know, the Bangladesh, the Vietnam, etc. So Africa is another player that is in the mindset of some buyers. Some other buyers are not there yet. I was talking 2 days ago with a brand, licensing holder for Puma, and they say, due to the pandemic at this point, we're not looking for new partners. We're going to discuss this after 6 months. So there is a very cautious stages that the buyers are looking, but yet on the other side, I just had an interview with a large, probably it's the fourth, you know, after the probably PPE. Yes, I agree with Chen, it's number one. I'm talking about the fourth guy in the US, part of the Lifan group, and they are keen to move out of China, and they are targeting Africa as one of their main focus. Yet they did mention the magic word that Ken and Siddharth said, flexibility. Okay, and that flexibility involves reducing MOQs, bringing a history behind on the supplier side to reach a different target segment market in this country. Yes, there is a lot of opportunities, but there's also a lot of challenges. The biggest concern and my message to East Africa is, how do you adapt to these conditions? How do you take advantage that the largest supplier in the world, which is China, is being replaced? And that opens the door for multiple countries and players to be part of that piece of the cake. So I think that's possible. It's just a matter of attitude from the manufacturing facilities to move forward, and as to start being more aggressive from the marketing and market access standpoints.
All right.
Thank you.
Ken, thank you, Andres. Ken, PVH is both an investor in East Africa and a buyer. Let's talk about challenges. You know, what as an investor like you, what are some of the challenges that you're facing in supplying from facilities here?
Yeah, so thank you. So yes, you're right. We have a manufacturing facility, and we did that actually. It's the only facility we've got anywhere in the world. You know, so that we didn't end up preaching to everybody about East Africa and what we should be doing and how it should work and the supply chain challenge. We said, well, let's stand a business up ourselves and also learn from that experience. And frankly, we you know, we make as many mistakes as we get right, you know. But there's a few things that I think we could give some guidance on, right? So first of all, don't be scared about that. Yeah, it's brand new for everybody, right? The world is changing, but it's also an opportunity. So you've got to stand up a team. First of all, I would say to you that that's the key thing for us is you can't come to a new region with an order book and a tech pack and say, here guys, you know, make one of these. You're going to have to put the infrastructure and the technical support behind anything like that. And I've been extremely fortunate to have had a great team here. But we committed to it. You know, we have a full service support mechanism for any business that we work with. So it stands a good chance that if we get something wrong, we have the ability to adapt and get it right again. So we try, we fail, we review, and we try again. I do apologize, but I'm in the flight path from Nairobi airport to everywhere in the world here. I apologize for the planes. And I think the other thing I would say is, you know, do your homework, right? Spend some money on independent reviews on demographics, logistics, the banking and customs apparatus, you know, utility costs and supply and service. Because ultimately, at the end of the day, that's good money, well spent. Yeah, and I think you get a lot of good stuff from that. The data is actually available. Might have to do a little bit of digging for it, but it's there. And look, if you also think about US markets, some people say they're quite tricky because of various sort of importation parameters that have to be met. Yeah, of course, but there's loads of people out there who can just give you a consultation on, you know, how to navigate that space and duty and tariffs, etc. And obviously, you know, from a business point of view, there's nothing better than the ILO and Better Work initiatives, which are, you know, all over East Africa right now, you know, and available to people. So all the mechanisms, I think, are in place there for people to pick up on and grow with. Does that answer your question, Maxwell?
Yeah, it does. And I think you've outlined really, really well. And, you know, I think it makes it real for our audience when we have an operator such as yourself who's actually put down money and is going through, you know, the actual experience of the business. So if there's somebody who's thinking about going into the space and wants to learn from others like yourself and see that's here, it really makes this real for them. And thank you for that answer.
Maxwell, can I just reiterate one other point that Sid said there? Look, one of the challenges I'm definitely feeling in Kenya right now is about AGOA and the free trade agreement. I'm going to echo what Sid said, right? It's not mutually exclusive. It doesn't need to be mutually exclusive, right? We can do both, right? And I think the apparatus in the region, in our sector anyway, okay, I can only speak about textiles and apparel, it needs both. You know, we today, to stand up a textile and apparel sector in Kenya, for us, it's just not possible. We have not got 1 yard of fabric from Kenya. We have, however, got millions of yards of fabric from Tanzania and Ethiopia made in Kenya. So it's going to take a period of time, and 3 to 5 years, 5 to 10 years, for the whole ecosystem to build for us to get there. And just to reiterate the point, the shirt I'm making is 82% made in East Africa. Fantastic. The last 18% is really, really tough. Yeah, it's like my old boss used to say to me, you know, you're only as good as your longest lead time component, Ken. And that's where we are. Look, we've got to keep that fight and keep that battle going. And of course, AGOA is a key component for that to happen. Sorry, Maxwell, thank you.
No, absolutely. I agree with you, Sid. I don't think it's necessarily mutually exclusive. And they are reinforcing. So we wait to see where that lands. There was actually a question from I'm not wrong, John, who asked, what are the timelines and how can businesses then make decisions based on this? And I think, honestly, no one has that answer. It's a process, and unless maybe Sen or Siddharth might have some view on this, or Andres, but this is a process that really is ongoing. No one really knows for sure whether Congress will come back and say yes to it. We're talking about the Kenya Free Trade Agreement. That's negotiations have just begun. Again, we wait to see where that lands. But at the end of the day, I think both are good. Let's see what then happens towards the end of that. We don't seem to be having many questions from the audience, so that probably means that you guys are doing an excellent job of explaining, the various perspectives that people are expecting.
Maxwell, can I interact with something?
Yes, sure, go ahead.
The American Footwear and Apparel Association, AFA, actually PBH sits down in one of the chairmans of the board of directors just recently, has a committee, a special committee to pursue AGOA extension. So that's a big pressure on the buyer side too. I just want to share that with everybody, that there is a lot of pressure. AFA represents over 1,000 retail industries, and they do have a commission that is dealing directly with Congress to provide technical assistance and pursue and promote AGOA extension. So there is a pressure on both sides, and just want to have that into the table.
All right, great. Let me ask one final round of questions, and then I'll ask you to give your closing remarks as we wind down. And this is for Maurice. How does the organization Open Capital help enterprises identify the right source of finance, maybe even attract investment into those? Any quick thoughts that you can share regarding that? Is it something that you,
Yeah, sure. Thanks, Max. As Open Capital, we are the intermediary. We want to link the business to the investor or the financier. So we support businesses across that fundraising spectrum. We'll start by working with the business to help them get investor ready. Some of what I shared earlier, like we'll help you develop your investor materials. We'll help you work through the financial models, the investor memos, the business plans. And given our experience engaging with different investors, we already have a good understanding of some of the questions that they'll ask. And so what we'll do is we'll work with the business to try and preempt a lot of these questions in developing the materials. And then having put that together, the next stage is then coming up with a capital raise strategy, because oftentimes you want to have a strategic fit. You want the capital, yes, but you also want a partner who's also going to help you grow. So looking at that, we want first identify what's going to be the optimal capital structure. Do you want it as debt, equity? Do you want quasi-debt? Do you want blended capital? Like, come up with a plan for what type of capital do you want. And then, because this will help the business best unlock growth. And the second piece to that is we'll also think through, and also in doing this process, you also don't want to have the business get to a point where they're exposing themselves to cash flow risks by over leveraging their balance sheet. So we'll then assess what additional support will you need, what technical assistance it is that you need, introductions to certain stakeholders. And then from that, we'll then think through or come up with a potential list of investors from our network of over 300 investors who are either local or international investors. And then having come up with that short list of investors, we'll then work with the company to conduct the outreach. We'll coach the companies on how to manage investor responses. Investors are often going to come back with lots of questions, but we'll work with the businesses and help them get to a point where they're comfortable leading responses to investors. And then if you get into that due diligence process, we'll also help manage due diligence requests. And then the last step to that is then working through now that closing journey. So preparing, reviewing, and negotiating term sheets, working with the legal counsel, and then negotiating for the documentation or negotiating for the transaction and documentation until we get to the investment close. So that's a high-level summary of how we help businesses raise and close investment.
Thank you. Thank you. We have a question, actually two questions here from Ayub Bekele. Ayub, if you can hear me, please unmute your mic and ask your question.
Thank you, Maxwell. The first question is to Mr. Siddharth of Velocity. How has Velocity been handling the pandemic crisis with order shortages, especially in the factory in Ethiopia? And the next question regarding PVH, how is PVH handling the orders for the various factories that has invested in sustainability and meeting the PVH standards, but currently struggling with the current situations, and what are the plans of the future of PVH in Ethiopia, especially working outside the industrial parks?
All right, see that? You can go first.
Okay. Let me start by saying that we are handling the COVID situation, lack of orders, with great difficulty. It's not an easy thing to do. What we've done is, again, we are being flexible. We are taking some amount of risk. Actually, what we've done is that we've increased the amount of risk that we've taken in this time frame. Like I said, we moved to the PPE very quickly. We moved to producing PPE product. We did a lot of this stuff where we did masks with the antibacterial, antimicrobe treatments, etc. But what we did mainly was that we took fabric that we had on hand, and we produced more or less blank garments. Like if we do printed T-shirts, we just made the bodies and kept it ready, and we know that the customer would come back and they would have a demand in certain sizes. So then we would just add on the prints as it came. So we took the risk of making some amount of product in a blank stage and ready for further processing as and when things got better. So that was what we did. Again, it would give us speed to market because we'd have blanks ready. On denim, we would have the garments ready without the wash, and we could put the wash on and get them out quickly. So those are the kind of things that that's how we got through it. Yeah.
Thank you. Ken, go ahead.
Yeah, I'm not really going to comment about individual factory loading profiles. Hope you don't mind. That's not for this particular forum. In the answer to the other question, is factories working outside of industrial parks? There are no limitations as far as PVH is concerned on a location or whether it's inside or outside an industrial park in our world. If the business has a credible opportunity, a credible product, a credible profile, it's accreditable and can match the aspiration of the marketplace, there are absolutely no limitations for the use of that facility.
All right, thank you. Thank you. We have Samuel. Samuel, if you can hear us.
Yes, Maxwell.
Yeah, go ahead and ask your question.
My questions are to Mr. Williams. How are you, Mr.
Hello, Samuel.
I wanted to know how you qualify. Yeah,
I can hear you. Yes, I'm not sure if everybody can.
Okay, I wanted to know how you qualify suppliers and what is the market trend. Are we going into more of cotton, more of polyester, more of blends? And number two, do you have programs in Africa right now? And what is the criteria again for, do you have partnerships? How does one join and know what you guys are doing so that we can be able to serve you in the future?
Okay, the first part of that I think is a great question in terms of, you're asking me where's the trend, what's the sort of market moving towards.
Yes.
I think, as I mentioned, perhaps a little bit earlier on, I think it's definitely towards casual. Yes. You're seeing whether it be man-made fibers or whether it be cotton. I don't think it really differentiates. but you're seeing that move towards sleepwear, activewear, casualization. I don't think there's any doubt about that. And Africa sits pretty fairly in that respect. What we sort of have is an investment triangle. Okay, so I'll just quickly explain this. Is, you know, we're looking for a country that first of all recognizes the governance and regulatory controls required to put a premier brand in place. Okay, you've got to have the government support, okay, and the mechanisms behind that around investment opportunities and incentive packages and the apparatus that goes with it. The second piece is you need a brand, okay, a brand like PVH, like Nike, Under Armour, or any other brand you can mention, because they need to underpin the investment of anybody to come into a region or an existing investor within a region. That first 2 or 3 years of somebody going into a new targeted market environment, investing in machinery, you know, subsidizing the need to develop a business, is a very tricky time. And so it's important that you've got a brand behind you that underpins that investment with an order book and a portfolio of things that you can make. And then the third thing, of course, is an investor, a company that also recognizes the virtues of that regulatory compliance and that control. You've got to be able to demonstrate that you can achieve all the basic principles of employment law, all the law that goes alongside, you know, fire regulations, building regulations, electrical safety, and that you're also, you know, investing in the right equipment and technology, which obviously we would as a business support. So that's the sort of mechanism we look at, and there's nobody in there that we would say is exclusive or not. I mean, one of our key demands for this next 3 years is to stand up an African business here. Much of the investment we've got here is from the Far East, or is from the Indian subcontinent, or is from the Middle East. You know, one of the key things I would love to see happen is to be able to stand up a purely African business.
Okay, great. And the partnerships, you have any partnerships at the moment? Or how does someone join what you guys are doing in Africa?
Do you mean like a joint venture? You mean, or how do you mean?
Like
Sorry.
a partnership program. I don't know.
Sure.
Like, yes.
So good question. So what we would do is we would take somebody who wants to come into the country, say a component supplier. Okay, somebody who wants to produce, let's say, buttons, right? And the company that makes them right now is, say, in Taiwan. They want to migrate that knowledge, but they don't really want to be setting up and standing up their own business here. We would put them together with somebody who's either an entrepreneur or already has a domestic button supply business. And we would sort of put those people together and hope they could actually, you know, grow that business to be export ready. That's part of my job.
Okay. Thank you, Mr. Williams.
You're welcome.
Thank you, Samuel, and thank you, Ken. Benzu, you know, we know that several US brands have faced financial difficulty. And one of the questions that are coming through is whether your organization as TDB actually do provide intelligence as part of the support that you're giving in order to minimize losses for these companies. Do you have any view on that?
Thank you for the question, Max. So yeah, to start with, I totally agree that, you know, the US brands have faced a lot of financial difficulties, but indeed, the East African exporters have got options. Ken did indicate around do your homework, which I liked very well, because I did highlight it as market intel. Know-how or understanding. I think that's very key for the exporters first, before the bank even comes into play. I think the exporters need to understand the market, and this can be done in various ways through the media, in terms of what is happening in the US, what the declining market or the declining segments, and what those niches are that you can take advantage of. I think we all agree that if you are looking at making suits, you will not sell at this particular time. But if you, for instance, you know, making t-shirts, anything that is casual, you might sell because everyone is almost working virtually and they're at home. So that market intel, the segments that are thriving, even in these difficult times, is very key. You know, for exporters to know. Also, I think the trade linkages, people like Andreas that understand various you know, segments of the market are very key in terms of them giving those insights to the various exporters within the region to ensure that they are future ready to a large extent. Again, trade relations are quite key, understanding what's happening globally, around the relation between China and the US that is coming under pressure, and being future ready in terms of what they can do to actually kind of bridge that particular void that might be created. Again, around market intel, what I would basically highlight is understanding the consumption demand. On the Wednesday conversations and presentations, I think Andreas did indicate that the demand under US has continued, as much as it's going through difficult periods. But also, if you're looking at sustainability, I think that's the intel that you possibly need to know as an exporter. Again, diversification. I think Sid did indicate that quickly they went into PPEs the time the pandemic came. So if you are an exporter that will think they will still thrive in what they have been producing over the years, then that is not going to work. So I think diversification is also very key in terms of the options that exporters have to see what are the trends that are actually thriving in these difficult times within this pandemic. I guess, PPEs are very key. So if you're able to shift in that particular regard, I think you would minimize your losses as an exporter. Again, innovation. We saw several industries literally being on a hold because they didn't have any innovative ways of actually continuing with their businesses. Now, if you innovate in these difficult times, largely it will optimize your resources, your operational costs are going to be minimized. And even though you're not having the expected sales, then you would cut down around the expenses and your bottom line possibly would improve in that particular respect. Again, when you talk about innovation, we heard about the transparency, the value chain, the supply chain, all those words being used. All that is to ensure that there is sustainability and there's the understanding of the end-to-end. Now, when you understand that, as an exporter, then the banks such as Trade and Development Bank then comes into play to fit into that particular puzzle around what are the appropriate solutions that then, can be brought to the table in terms of supporting these particular, exporters. And I would want to submit a suggestion around how to partner with, TDB and any other financial institutions where they would provide technical support. Within our SME fund, we've got what we call a technical support initiative where we link these various exporters with consultants, with people that have this particular understanding within the segment or the sector to ensure that they stay afloat in terms of information and the technical know-how in terms of the terrains that are actually on the ground. Additionally, product offering in terms of what we can provide to the exporters. They would be looking at more so ring-fenced, solutions, financial solutions, in terms of trade instruments, your letters of credit, your guarantees, that ensure that, the time that they have an order, they're able to be certain that they can honor, first of all, that particular order, but at the same time that the buyer cannot pull out of that particular transaction at any given time. But more importantly as well, that there is also certainty of payment. So I think in terms of the options are large, and the bank positions itself to partner very well with these particular exporters. Thanks.
Great, thank you. I see Ken has been busy on the Q&A answering questions, so thank you for that, Ken. In the interest of time, I want to start bringing this to a close, and I want to invite each of our panelists, starting with Andres, to give us your final thoughts.
Thank you so much, Maxwell. I think a lot of issues were brought to the table today. From a successful manufacturer, as well as one of the largest importer in the U.S. market, and of course the financial portion of the equation with Benzu and Maurice. I think that's a lot of opportunities Like I always said, I think Africa it's a unshaped, unpolished diamond. Once it's polished, it is going to be a true actor in this industry. It's in that way. It has all that it takes, and I am very fortunate to be working with the region for the last 4 years. Have met wonderful people, and I really foresee great opportunities and a prosperous future for the industry. Thank you so much for the opportunity you have given us to express what we know, what experiences are from several angles of this industry. And as you can see, there's a lot of constraints, but there's also a lot of opportunities. This pandemic has created one of the most important factors in history of humanity, which is that we have to become innovative. We have to let our brains to think on how to adapt, and that's what we're moving towards to. Thank you so much.
Absolutely. Thank you very much, Andres. Siddharth, your closing comments.
Well, I agree with Andreas. I think that Africa really is a diamond that is undercutting right now. And I think that there is huge potential. I think that people should not be scared to come in and invest in Africa. Just as an example, when we got there and we are a garment manufacturer, but when we saw the situation, we went ahead and put in a plant to produce thread, sewing thread, because that's a key component and it didn't exist. So we started manufacturing sewing thread and poly bags. Both we intend to do carton boxes too. But these are all the kind of things that people should not hesitate in doing, because it is the next frontier. I mean, there isn't, the rest of the world is an aging population. Africa is not. East Africa is very young. People will will be good for this industry for a while to come. So I think everybody should look at it and try and develop the area as much as possible. Thank you.
Thank you. Thank you very much, Sid, for your contributions. Maurice, any final thoughts?
Yeah, sure. Thanks, Max. I think for me, one of the exciting thing or interesting things coming from this discussion is that there's a clear opportunity. There's a lot, and there are opportunities for apparel businesses that are looking to grow into the US. And one of the other themes that has come up around how do you continue adapting and shifting your business. So in thinking about that, when it comes to finance and raising finance to grow and capture that growth, I think there's a lot, whether that's investment or whether that's technical assistance. There are some programs where, like the USAID, for example, is supporting businesses that are looking to export or engage with the US. There's the Invest, and there are some of those programs which can help businesses that are finding challenges when it comes to raising funding to tap into these opportunities. So I think given that, it becomes a very exciting period for businesses that are looking to export into the US, in the sense that there is that market opportunity, and we're also seeing interest in providing that support to bridge that funding gap to help businesses tap into that.
Yeah, indeed.
Thank you.
And thank you for that, Maurice. And the same sentiment was echoed by Roger Bird of the Kenya Investment Mechanism last Wednesday. You know, that the funding is definitely there. There's interest in the region. I think it's really up to the operators and the businesses in the space to step up and then take advantage of this. I want Benzu, we'll give Benzu the last word. So I'll invite Ken to give his closing remarks, and then Benzu, you can go after Ken.
Yeah, thanks, Maxwell. Look, it's been great, and thanks very much for the opportunity to talk, and lots of great questions as well, lots of keen investment questions. That's great news, and that's really the best thing about East Africa for me, is I've yet to meet anybody who doesn't understand the opportunity. Okay, and that's amazing. You know, it really is. It is the land of opportunity. Call it an uncut diamond. It's exactly that. And look, if you've been around the industry as long as Sid and I, Sid less than me, he looks like 30 or something. Last time I saw him was in 2005. He looked about 12 at that age. But seriously, we've been around the industry a lot of years, and we've seen the countries that, you know, have been trying to greenwash themselves and you know, have got very little understanding or concern about regulatory compliance. And we've come to East Africa, and it's bestowed upon brands and companies like ours not to mess it up, right? It's a great opportunity to get it right, to build a supply chain with all the virtues that you need to be a long-lasting generational business, right? And it sounds all very cliche, that, but actually that's really why we're here. We didn't come here to do what we've done somewhere else in the world and repeat offend. We've come here to actually learn from all the things that we've done wrong somewhere else and have the opportunity to put it right. And East Africa has just been such a receptive arena for that. And I encourage anybody who's got the idea and notion to enter the sector and find a product or a niche or a component or a material or a manufacturer. You know, be ready. You know, this is the place to be right now. Thank you.
Excellent. Benzu, closing thoughts?
Well, thank you so much, Maxwell. I mean, as everyone has mentioned, there is immense opportunity within the sector, and both the business owners, the financiers need to collaborate more. As Trade and Development Bank, I mean, our mandate is to foster trade within regional economic integration and sustainable development. And this is through, you know, our solutioning in terms of trade finance or project and, infrastructure finance. So it's exciting to be a part, of these discussions. The insights around the opportunities, as I've mentioned, are very immense. And we hope that, we will not stop here. As mentioned earlier, TDB has a financing design that looks at the full ecosystem, just ensuring that we speak to the market players, so the people that are in the business, and also determine what their needs are, also connect them in terms of the full value chain and also the target beneficiaries. So it's a full ecosystem that we're looking at in terms of supporting, and also just co-creating with selected partners. So other financial institutions, other business development services providers within the jurisdictions, on how we can work together and just have solutions that can support this particular sector. So again, very excited to be a part of it, and it's exciting to see such a creative industry such as the apparel business, in terms of how paramount it is for the future, especially in Africa, and how it will promote inclusive growth. So it's something that I'm excited about, and Trade and Development Bank is here to support, and hope that we'll see some leads coming out of this. Thank you.
Okay, thank you very much, Binzu. And thank you so much, our panelists, Andres, for your great insights. See that it was a pleasure to hear what your experience has been, and the pivoting that you've had to do, and how as a business, as an operator on the ground, you're really looking at how you can be flexible, how you can be agile and innovative in this space. Maurice, thank you so much for sharing your various perspectives from an investor or an advisory firm that would help businesses be able to secure funding, be able to secure capital into the business and investment. Ken has been great in terms of just outlining what US buyers, the perspective, and some of the critical things that they look for when it comes to investing in this space and partnerships. And of course, Binzu, you've wrapped it up with a very, very good outline of the sort of support that TDB is able to give to the space. I want us to take a quick poll that's coming up on your screen right now. It will just take you, there are 2 questions. It should take all of 30 seconds. Eva, if we could have the poll up. There we go. Please take a quick poll. Our quick poll, this will help us get a sense of what your perspectives are as far as this particular forum is concerned, and will help us shape the upcoming forums that we possibly could be hosting around the same sector. So please just take your time. I want us to get to at least 50%, 60%. We have 30% now. Great, keep going. Wonderful. I want us to hit 60. Please, Paul, they're just 2 simple questions. As Ken is busy answering the questions that he has on his chat. Oh, 77%. This is excellent. So as you can see, Eva, I think we can stop it there. And you can see the results on your screen. So 82% of you found this very useful, which is great. And kudos to the panelists for your, your insights and sharing your experiences. You also say that you'd like more information. 32% of you polled that you'd want more information on US apparel markets. Technology solutions, just 4%, and 21% on financing. So Maurice and Binzu, you do have some, hopefully some work to do from here. So with that, ladies and gentlemen, I want to just thank again, most sincerely, our panelists, Binzu, Siddharth, Sen, Oken, Maurice, Andres, for your thoughts, your perspectives. Yeah, I think it's been great. For me, this is always so refreshing to hear, the sort of expertise that is available out there and get perspectives. It's really, really useful for us. I also want to thank, in a very special way, Margaret Waithaka and the team from USAID, Southern Africa Trade Hub, for putting together this forum, and of course for partnering with us as AmCham on this. And a very, very big and special thank you to our audience for your time. For those of you who've actually taken your time to join us in actually all of 4 hours, because there've been 2-hour sessions each. We really appreciate your time, we appreciate your questions, we appreciate your participation. We really hope that this has been worth your time and that you've taken away value. So with that, I want to bring this session to an end. Thank you once more. Have a wonderful weekend, and bye-bye. We've come to the end. Thank you.